Okay, here in this video, we're continuing our discussion of ARC Section 80, and that's for the compilation of financial statements. In this particular video, we'll be discussing how we need to modify our accountant's compilation report when there are departures from the applicable financial reporting framework. So remember, when we're performing a compilation, we are not providing an opinion or any level of assurance, but whenever we're going through and obtaining certain information, we might come across instances where there are departures from the applicable financial reporting framework, and we might need to modify our report based on those. So in this section is ARC Section 80.29 through 33. So it says if while we're performing our compilation procedures, we become aware of a departure from the applicable financial reporting framework, including inadequate disclosure that is material to the financial statements, and the financial statements are not revised, then we should consider whether modification of the standard report is adequate to disclose the departure. And so it says that if we conclude that the modification of the report is adequate, then we should disclose in a separate paragraph of the report the departure. And in that paragraph, we should also disclose the effects of that departure that were determined by management. So what amount or what type of disclosure would have been included if we had not departed from the financial reporting framework? What was different because we did depart from the financial reporting framework? And so if the effects of the departure aren't readily known to us based on our procedures, we're not really required to determine the effects of the departure. However, we should say in our report when we're adding that paragraph that the determination has not been made by management. So we would hope that management would maybe provide some sort of effect that would help us to provide that information to the user of the financial statement. But if they don't, then we're not necessarily required to disclose the effect of departing from the financial reporting framework. We just have to say that management didn't provide us what effect that was. And if we decide that modification of the compilation report, for instance, adding that paragraph to it, if we decide that that's not adequate to indicate the deficiencies in the financial statements as a whole, then we should withdraw from the engagement and provide no further services with respect to those financial statements. And also, we should not modify the compilation report to include a statement that the financial statements are not in conformity with the applicable financial reporting framework. So the general compilation report, which we've seen in several videos as we've been going through them, says that management has prepared financial statements in accordance with the applicable financial reporting framework. However, if going through our procedures, we may notice that management has departed from a particular requirement in the financial reporting framework, and that could be a disclosure. And so if that's the case, we have a couple choices. We could add, if it's kind of a small departure or kind of a one-off item or that's easily explained, then we can add a paragraph to our compilation report that says, hey, they departed from this particular financial reporting framework. And we can either tell the effect of the departure from that framework if management has provided it to us, but if management doesn't provide it for us, then we just say that management didn't determine the effect of that departure. But there may be instances where the departure is so severe or so pervasive across the financial statements that we just decide that there's no way to explain it all, or that the financial statements are just entirely misleading. Even if we decided to try to list all of the deficiencies, a user of the financial statements might not still be able to understand the effects of it and the performance and financial position of the company. So in that case, we should just withdraw from the engagement entirely, and we should never say that the financial statements are not in conformity with an applicable financial reporting framework, because that's pretty misleading as far as the procedures that we've done, and especially since we're not in a compilation, we're not providing an opinion on anything, and we haven't done the procedures to say this is true or not, and so we should never do this. However, if we do come across an instance where they have departed from the financial reporting framework, we can make note of that if it's a one-off item or something that's easily explained. But if it's pervasive, then we just need to withdraw. So we've got a couple of explanatory material sections here, A39, A23. Let's just take a look at those real quick to make sure that we understand the requirements of this section. Okay, so now we're down in the explanatory material at A23. It says that when making a determination about whether and how to withdraw from an engagement, we should consult with legal counsel. So if it turns out in our procedures we notice that they departed from the applicable financial reporting framework, and it was bad enough that we decided that we should probably withdraw from the engagement. As with any of the standard sections that we go through, we should consult with legal counsel before we do so to make sure that we're able to, and what are the ramifications of doing so. And here, continuing in the explanatory material section on reporting on the known departures from the applicable financial reporting framework, it first discusses here the reasons for why we should not say that the financial statements are not in conformity with the applicable financial reporting framework, and it says we're precluded from including a statement to that fact because such a statement would be tantamount to expressing an adverse opinion on the financial statements as a whole, and that opinion can only be expressed in the context of an audit engagement. And so the engagement that we're doing here is a compilation, and that in itself means that we're not expressing an opinion at all. So we want to refrain from including a statement that financial statements are not in conformity with the applicable financial reporting framework. So here it tells us they've got some explanatory material or some illustrative examples of compilation reports, and Exhibit B and we've seen this in some of the other videos that we've done up until this point, but let's go down and take a look at the ones that show what to say when there's a known departure from the applicable financial reporting framework. Okay, now we're down in Exhibit B with some illustrative examples of the accountant's compilation report. And here at Exhibit 6, we have the compilation report on financial statements in accordance with GAAP, but we are aware of departures from GAAP. And so let's go down and take a look at illustration 6 to see how we disclosed the departure from GAAP. So here we have all of the normal disclosures in the accountant's compilation report that were noted in a prior section of a prior video. And then here we have the paragraph about the departure from GAAP, and it says that accounting principles generally accepted in the United States of America require that land be stated at cost, but management informed us that the company stated its land at appraised value, and that if accounting principles generally accepted in the United States had been followed, then the land account and the stockholders' equity would have been decreased by $500,000. So management's recording the land at appraised value rather than stated cost caused them to depart from the rules in GAAP, and so that's been disclosed here. And this tells us that the cost basis was actually $500,000 less than what the appraised value is currently. So that would be pretty helpful for users of the financial statements to know, and is a good example of how to disclose management's departures from the financial reporting framework.